Hello, everyone, and welcome to another backstage interview at the Metals Investor Forum. I'm Gwen Preston, and I'm joined today by Luke Alexander of Newcore Gold. Now, Newcore is a company that I'm super excited about this year. I think it's an asset that still is sort of debuting. Like, it's still a lot of the market isn't super familiar with this company and asset yet, and I think that there's a lot that's going to happen over the next year. So Luke, why don't you talk about the scale? Maybe let's start with the scale of the project, because I think that's maybe a good starting point.
Yeah, absolutely. Thanks, Gwen, for having me on. So, from a scale perspective, 216 square kilometers is the overall size of our project. So a very large land package that we have in Ghana. We were able to put this land package together over a number of years, which is why we've been able to amass such a large package in country. If you look at it from a drilling and anomaly perspective, we've identified 25 targets across the overall property, of which we've only drilled on 6 to date, and only 3 represent our current resource. So with the drilling that we've got going on at the moment, we'll look to continue to expand the existing resource, but also look to make new discoveries at some of these additional targets. So the nice thing from a shareholder perspective is you're getting some easy wins in terms of step out drilling on our existing resource, but then also the opportunity to make some new discoveries at some of these additional targets that we've worked up and identified across our overall project. And in the mid to long term, that will continue to be the trend, is grow resource, make new discoveries, and we've got a ton of opportunity from that perspective, which is from a shareholder perspective, I think very exciting.
Yeah, I do love stories that have what I call like the fundamental strength. So like a defined asset, opportunity, mine plan, it all makes sense. But then that splash potential on top, and that's absolutely what your sort of triangle of your tiering of targets provides here. One of the things that's exciting in that on the exploration side of things is looking a bit deeper. And this is something that's really interesting to anybody who knows gold geology in Ghana, in the area. Things can often get pretty exciting when you go deeper, but drilling to date at Enchi has been very shallow. So why don't you talk a little bit about the process, like what you needed to know before you started that program, because you're now looking deep for the first time.
Yeah, absolutely. So the focus of the drilling to date has been quite deliberately focused on the oxide material. As you know, and a number of your listeners will know, that material is heap leachable, which is a type of mining, and needless to say, is a lot less expensive. So to date, we've only drilled down to an average of about 50 or 60 meters below surface. So we've really just only scratched the surface, and that's been focused on those oxide ounces, which typically sit on our project within the kind of first 50 to 80 meters, depending on which deposit you're looking at. But with these greenstone hosted deposits, and if you look at other 5 million plus ounce deposits along the same Bibiani trend as us, where you see that they really started to double, triple, and quadruple in size is when they got deeper. And when you drill deeper, you typically find higher grades as well. So for the first time ever, we're going to be drilling down to kind of 250, 350 meters vertically below surface, which, in terms of drilling is still relatively shallow compared to, the depths that a number of other companies are drilling down to. But again, we're looking to start getting into those sulfides for the first time ever, proving up that the mineralization extends at depth, and hopefully start to find some higher grade as we drill deeper as well. So, so we're very excited about that. But obviously, we're never going to lose focus on the huge opportunity to expand those oxide ounces at surface and make new discoveries around our property within those oxide ounces as well. So it's a real two-prong approach from that perspective.
For sure. And even on the fundamental side, if you want to call it that, sort of the developing oxide mining opportunity, that is an evolving situation, right? Because you're fairly close to putting out a PEA, like a revamped PEA. There's an old one from 5 years ago. So you're going to refresh that. But at the same time, your opportunity is sort of transforming before your eyes. Your sort of most recent drill results have been filling in gaps in one of your resource areas that looks to me like those results would have the potential to really add to the mineable ounces in that area.
Absolutely. If you look at our drilling that you're referring to at Boeing, which came out first week of January, I think it was January 7th. You'll find the press release on our website if you want to have a closer look. But we had about an 800-meter gap within our Boeing North and Boeing Central areas, and we stepped out and we drilled through that entire gap area. And as we expected, the mineralization runs right through that. So, our view is that will just turn into one very large pit by connecting the northern part and the central part. It still remains open to the south and to the north. So we'll continue to step out and extend the overall length of that. But yeah, we viewed that as very low risk type exploration that will add meaningful ounces. Similarly, at one of our other resource areas, Sium, we've got a large gap area there that just historically hasn't been drilled. And one thing I'll flag is that this isn't considered infill drilling. This is true step out, additive resource drilling that we're doing. And these gaps are very large. So we would expect at Sium that we'll start to see that turn into one very large pit as well. I mean, they're both very significant deposits, over 500,000 ounces, but we see them significantly growing from here.
So yeah, I mean, it's interesting now we talk about scale in a different, from a different vantage point. We were talking before about the scale of the overall project and the number of targets that you have to test, and therefore sort of the splash potential and the sort of excitement side of things. But growing a 500,000 ounce oxide deposit, that's in a good mining setup to 1 million ounces, that's right beside others that have the potential to do the same thing. That's also very exciting. And so you're doing this PEA to capture what you have right now, but like I say, that will evolve as this drilling continues.
Yeah, and the nice thing is, I mean, I was referring to Boeing at 500,000 ounces. It's actually 530. Sium's 530, and NIAM currently sits at 155. So our total resource across those three deposits is 1.2 million ounces, of which 95% is in the oxide and transitional category. You asked about the PEA. So we did have a 2015 PEA, which was done on the property. That incorporated 700,000 ounces or 710 or 12,000 ounces of in-pit resource. That became stale dated when we put out our 1.2 million ounce resource update last fall in 2020. So the reason and part of the motivation for putting out an updated PEA at the end of Q1, beginning of Q2, will be to obviously incorporate all of those 1.2 million ounces into that PEA, and we think that will ultimately add value for our shareholders, and ultimately an underpinning of value for the stock.
Absolutely. Okay, let's touch on the one other thing that I think you probably get asked about every time you have a conversation about your project, especially with retail investors, and that's jurisdiction. So we talked about it a bit during the conference. Ghana is in Africa, to paint with very broad strokes, but it isn't a standout in that context, perhaps. So talk a little bit about Ghana in a gold mining context.
Yeah, absolutely. So Ghana is a tier 1 jurisdiction to operate in. From a security perspective, it's always ranked as one of the top, if not the top country within Africa. And I'd encourage anyone to go and look that up. There's lots of different surveys and groups out there who provide that kind of information. So from a security perspective, it's a great place. And also, I mean, one of the things we just put together a slide yesterday that I thought was quite interesting. We looked at which companies are operating in country, and I've highlighted this in other presentations, but currently we've got 4 of the top 10 largest gold companies on the planet who are operating in Ghana, and actually 3 of the top 5 global gold companies operating in Ghana. I mean, needless to say, those types of companies do huge amounts of work in terms of security, political risk, taxes, everything that goes with operating anywhere in the world. And, to point to the fact that these large companies are operating in country, I think speaks to the quality of the jurisdiction. I mean, to look at Newmont, for example, 18% of their total global production comes from Ghana. Goldfields, 37% of their total global production comes from Ghana. Anglo Gold, again, one of the top gold producers on the planet. About 10% of their current gold production comes from Ghana, and that's going to increase to about 20%. So needless to say, I mean, it's one thing for me to say it, but to have these major companies investing significant capital in the country and allocating such large amounts of their overall production, I think really highlights what a great jurisdiction it is.
Not to mention underlines the potential outcome avenues for a company like Newcore. Obviously, you guys are pushing this thing ahead. You have the team, you have the know-how to push this thing ahead to whatever end. But that end could involve interest from one of those operators since they're already so established in Ghana. If this thing continues to grow in the steps that we think it might, it becomes interesting to them.
Yeah, absolutely. And I mean, just to add to that, to give you a real example that we've just seen in the last 6 months, look at Cardinal Resources listed both on the ASX and TSX. I mean, you had a bidding war for that company by two major gold companies, Shandong, which again is about a $14 billion market cap company, listed in Hong Kong, as well as Nordgold, which if you look at some of the press out in the last couple of days, there's talk about them going public in London with about a $5 billion valuation. So, I mean, those two companies were in a hostile bidding war starting at 60 cents a share for Cardinal and eventually settling at $1.05, with two other bidders coming in along the way. So, the fact that you've got these major mining companies fighting to get into Ghana, again, I think speaks to the geology, but as well the jurisdiction and what a great place it is. And one other example will be Bibiani, which is an asset that's about 70, 80 kilometers to the north of us. So directly to the north of us, we've got Kinross's Chirano mine. To the north of that, you've got Bibiani. And you'll see in Q4 of last year, just before Christmas, that the Chinese bought that asset as well. So, again, all these things point to what a great jurisdiction it is. And we're very fortunate that we were able to amass such a strategic position along the Sefwi-Bibiani belt when we did, because it'd be very difficult to do that today.
I think we've touched on a lot here. Let's wrap it up. Thanks for taking the time for a backstage interview here, Luke.
Absolutely. Thanks for having me.